Welcome to the Wade Borth Podcast, where fresh thinking meets financial freedom. Each week, we explore ideas that challenge old habits and light the way to a stronger financial future. Let's get started.
Hello, welcome back to the Wade Borth Podcast. Today, I'm going to talk a little bit about something I saw. Somebody forwarded me a website link. I found some interest in this. This comes from a website called 24/7 Wall Street. And I made the point about Americans' retirement crisis, right? The shocking numbers. Like how many people have less than $500,000 ready for retirement? And I've seen these numbers before. I think we've probably all seen these numbers before. But it just made me wonder, why are these numbers so difficult to appreciate, so difficult to understand? So I thought I'd just dive into this a little bit more today on the podcast. So thank you for joining me today on the Wade Borth Podcast. Let's just get into it. I mean, it's a conversation we're having all the time with people, right? So it's like, do we have enough money for retirement? Do we have enough passive income? People probably understand that I don't see retirement as something that I plan my world around. It's this idea of if I have enough passive income to do what I need to do, that's what we want to, again, that's more of a passive income conversation than is a retirement. And again, I've done a number of podcasts about this, like, are we retiring, we're running to something or we're running away from something? And hopefully we're running to something, right? So that gives us a better destination, gives us a better purpose in life. And so I think about retirement is, hopefully we're not in a job that we hate, that we can't wait to retire. Maybe it's a time for us to retool, say, hey, I've given all I can to this one area. Now I'm looking forward to do something else. And I'm looking forward and I'm running towards something else that can bring me, abundance in all the 5 areas that we talk about in our lives and what we talk about at Fact Commitment at Sage Wealth, because it is part about finding abundance in your life. But again, how do you do that? You have to have abundance in the financial area before you can really find abundance in doing, all those other freedoms. If you were looking for freedom of time, relationship, purpose, that does take money to make it happen. So the question is, are you engaged in something that you love to do or that can provide you passive income that can give you the freedom of the time to fulfill your purpose? So let's talk about this a little bit today, because I have some thoughts around the why behind this. And it's an interesting article that I was looking at because it had some ideas here that we really like to touch on. So the headline is Retirement Crisis, the Shocking Numbers, right? And so the numbers are more than 50% of Americans have less than $10,000 saved for retirement. Think about that. Less than $10,000. Now, that's less than, more than 50% of Americans have less than $10,000. Well, we have to understand that some of those people are also going to be 25 years old, going to be 20 years old. The baby boomers are not the largest population segment of our economy anymore. There are other larger segments, but the people that had the most money in retirements were the baby boomers. And so that's going to be passed on. So not sure how that's going to impact. And maybe a lot of people are expecting that, or saying, hey, I know mom and dad have a lot of money. That next generation is going to be me and my sister, and there's probably not a lot of kids involved. And so maybe they're expecting that. Maybe they're planning on that. But that's difficult to plan on because, again, you don't know what's going to be there and when. So I'm not sure what's leading into all those numbers, but there's a lot of theories around it. Every time you read into this and you watch experts talk about this, everybody's got an opinion on it. But I think that's part of it, is like, hey, I don't necessarily need to do a lot of savings myself, and because I know there's going to be some assets coming from an inheritance or whatever it might be. Now, if we're thinking about it strategically, that's not a bad plan if we say, what is the most efficient way to transfer dollars from one generation to the next? Anybody that knows me thinks about this from the standpoint is like, if I'm a baby boomer that's well into retirement, I'm like, how do I transfer these dollars? I want to go to not even my kids, but my grandkids. How do I create this transfer of wealth? And I think the best way to do it is with a leveraged dollar. And so if I have dollars sitting aside and like, I want to transfer something to my kids, or more importantly, my grandkids, maybe into a trust or something like that, why not use life insurance to make that happen? So again, this study was just looking at, what do they have in the retirement accounts? And again, they call them savings vehicles. And I'm going to say, there's a difference between savings and investments, but they're just looking at that. They're not necessarily looking at what have we done? What have I done? What have you done? From the standpoint of talking to mom and dad and saying, if you're going to pass dollars, why not pass a discounted dollar or a leveraged dollar back to me and my siblings through the use of life insurance? And so I would just encourage you to think about that, engage with us, and have a conversation. How do we do that most efficiently? So just think about this. If mom and dad had $100,000 and they want to pass that to the grandkids on a tax-free basis, how could we do that? But what if we could take the 100,000 and turn it to 300,000 or 500,000? Wouldn't that be a more efficient use of our dollars? That's a leveraged dollar. So I think that's one thing we can consider. If you're saying, hey, I'm expecting dollars to come my direction, we can bring some certainty. We can actually give mom and dad a permission slip to spend all their money and still pass that legacy. And so it frees up some dollars for them and it gives them some certainty to help pass those dollars for retirement. Because I know that that's been on the mind of a lot of clients I've talked about. Like, I don't need to save as much for retirement because I know I'll be inheriting the business or whatever it might be. So that's one thing I wanted to bring up is like, are we thinking about this strategically? Like, how do we leverage those dollars that we're assuming are going to be coming our direction? And B, how do we guarantee that it's going to happen when we want it to happen? And the only way we can do that is through, is through properly structured and maintained life insurance. The other part of the equation is, I think when they look at retirement vehicles, people are really hesitant, especially the younger generations are hesitant to take money and put it into a vehicle, a 401k account, IRA account. They won't be able to touch for the next 10, 20, 30. They can have access to it without any kind of penalty or tax implication, penalty implication. I think there's a lot of hesitancy to say, why do I want to take my money and put it into a vehicle that the government created the problem of taxation, and now they're going to create the solution by saying, hey, you can put money here. We're going to call it a retirement savings vehicle, which is truly an investment plan for you that you can't touch until you're 60 or 65 years old. If you think about that, there's a real reason why people are hesitant to delay the use of those dollars because they can't see the benefit of waiting that long. That's why this idea of what if we take the dollars that you'd want to save, and let's start talking savings and some things at the end of this article that's on the screen that we're going to talk about. But what if we take the dollars that we save and find a better environment? A better environment being a place that gives you tax benefit growth and distribution of dollars. What if that's the opportunity that's hey, what if we could find 8 benefits? Constant compounding. We can borrow against it if we need to. It's private. That's the other part of this conversation. Like, what are they measuring? They're measuring information that other companies are reporting to the people that are taking these stats. So life insurance is a private contract between you and the insurance company. Nobody needs to know you have it. So there's a tremendous amount of privacy. And when there's a death, that's done on the income tax-free benefit if it's structured correctly. So all those things, I think, are playing into this narrative that people aren't saving. I think there's more along the lines like there have been more creative ways to save. And people are getting wise to the fact that I don't need to put all my money into a 401k. I'm not saying 401ks are bad or retirement investment accounts are bad. I just think it's important for us to understand what they are and what they're not and what I'm having to give up in order to make that happen. When we look at these numbers, it is truly scary. When I look how many people have an account between $10,000 and $100,000, only 20% of the population out there have an account that's worth at least between $10,000 and $100,000. More importantly, between $100,000 and $500,000, right? So this idea of there's only 14% of the population that have an account that's worth between $100,000 and $500,000 in arguably one of the most prolific bear markets that's been out there. So if it's truly been that great, where's all the growth and where's all the money? When only 14% have an account that's worth anywhere between $100,000 and $500,000. So there's that where like there's a real shortage when it comes to like, how am I going to retire? Where am I going to retire? Or what am I going to retire with? So I think that's one of the biggest ones. Because if you think about it, and let's go to the $500,000 mark, there's only 4% people of the population, according to the study, that says, that have between $500,000 and $1 million in their retirement investment account. 4% between $500,000 and $1 million. And what does that mean? So let's just take that conversation. If we have $500,000 in our retirement account and we go to retire, and you can say, hey, I'm going to pull out 5%. Now that's $25,000 that you can pull out at 5%. Think about how little that is if you're going to say, I need to make this last for the next 30 years. $25,000. And that's assuming there's, not some big down markets and different stuff going on, but with any kind of certainty, it's sketchy. There's not a lot of money to be had there. So the point I would make is start thinking about what is the alternative I could be having. And one of the things that when we get down here to the bottom, and then let me make it just a little bit bigger, is that it goes through a lot of, it says establish age-based benchmarks, right? Savings by age 30 and 40 save between 30 and 40% annually. I love that advice. I love the fact that we should be saving between 10 and 30% of our income. But I'm not a fan of putting in an account that you can't touch or have control of for the next 20 or 30 years. How about if we just imagine if we take that money, put it into an account that can, get you a high yield bond yield, have a after-tax yield, and then have access to it, have liquidity, have use of it, and put you in control of the banking function in your life. So think about that. That is a great piece of advice, saving between 10 and 30%. And it doesn't have to happen all at once. This is the conversation we love to have. So reach out to me if you say, I think I want to start saving more. I don't want to do what's been traditionally, or, I would say the last 30 years been kind of forced on us to put money into my 401k because I want to have access to it. I still want to use the money, but I still want to be saving because I want to have enough money to fulfill my dreams. And I want to be able to use my money while I'm still young and healthy, and my kids can enjoy the time with me as well. So we have alternatives to the traditional savings vehicles that are out there. Or I'm going to call them current savings vehicles because, again, they're not savings vehicles, they're investment vehicles. And it's interesting is, it says understanding risk tolerance right here. Most people aren't willing to take the kind of risk that they're talking about in order to get the return they want because they want more certainty. And again, if you're getting conservative, say, and it says, between 5 and 7% annually, well, let's just grab the 5%. And when we take a look at our whole life insurance over the next 10 or 20 years, you're getting probably more than that on a gross basis. Now, again, we talk net numbers, the rest of the industry talks gross numbers. So think about that for a second. If you can get a 5 or 6% gross number, take away from taxes, that's probably right about where your life insurance policy is going to be over that same time frame. But it gives you that certainty that money's never going to go backwards. So there's a real benefit to doing that. So anyhow, I saw this article I wanted to share with you because it's really interesting. It struck me just to the point where, man, there's a message here that needs to be out there. There is a solution to this problem, right? So you see a problem here, but there is a solution. It's let's have a conversation between you and I and say, how can we start focusing on our retirement planning using tools that are maybe not so traditional, but I'm going to go back and say these are more traditional than they've ever been because this is what was done for 150 years leading up to the invention of the 401k. People put a lot of money into their whole life insurance. So a lot of people are doing this. They're saying, I see a place I can hold my money. Importantly, I can get access to it if I need it, if I want it, if I can use it responsibly. So reach out to me. I'd love to hear what you think. Share this podcast with other people because it's helpful for the message to get out. I would love to hear what your plans were and how we can be of service to you. So again, thanks so much for listening, and we'll talk to you soon.
Thanks for joining me today. Remember, small shifts lead to lasting change. Keep thinking differently, keep moving forward, and we'll see you next time.